investments and/or investment strategies recommended and/or purchased by advisor or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back. It's been a busy quarter. Now that I think about it, getting close to year end, people are kind of looking back, seeing what has gone on, where they think they should be going, making plans for the new year. I was pleasantly surprised. Actually, the last couple quarters have been pretty rough on the value-oriented funds out there. They've actually underperformed now for an incredibly long time period, which kind of blows my mind. But smaller caps have done nowhere near as well as the large caps have done, and this is for the past 4 years. That's an extremely long time period for smaller companies not to do as well as the larger companies have done. And they're growing faster. Now, they're not growing faster than the top 50. If you take the top 50 stocks out of the stock market, that's where about half the growth has been coming from. And it's a little unnerving because that's not a really large number of stocks to be leading the market that way. So, and if they decide to go to sleep or start trending sideways, which the smaller companies, medium-sized companies have been, then it can be pretty difficult. Psychologically, it's really difficult. Intellectually, I mean, if you're looking at growth rates, the economy's still actually doing fairly well, particularly with everything that's going on. And inevitably, at some point in time, that will lead to gains. But I'm telling you, when you're looking at what the markets have done over the past 3 or 4 years, depending on which index you're looking at, it is really a wide swath. So S&P 500 has done the best out of most of the groups. And if you take the top 50 stocks out of the S&P 500, that's done even better than the S&P 500 that has. Is that going to continue that way? I don't know. I really don't know. Nobody ever knows for sure. But one good thing is that the valuations are not obscene the way they were back 20 years ago, March of 2000. That was rough. Looking at how high the valuations were relative to growth rates, relative to asset values, all that stuff, every single measure you looked at, it was 2.5 times higher than it should have been. And we are not there. Thank goodness. But anyway, I think it's pretty good. I've been working on some models. It's a lot of it. Terribly difficult. It's a lot of effort. Takes a lot of time. I won't be ready with them for another, at this pace, probably another 8 to 12 weeks, somewhere in that neighborhood. And so stay tuned. I'll keep talking about it. I'm running some tests on some of them now. Some of the braver clients I have, and my own money. I always go first. I never build something, test it on the public before I have opportunities in the stock market, and I think there are lots of opportunities in fixed income. Fixed income, things like treasuries, things like fixed annuities. Fixed annuities are they've been raising the rates on them for quite a while now. So uh, that has actually slowed down. So I'm not sure if that's going to be something that continues to happen. So you may want to try to lock in. That's one of the nice things about fixed annuity. You buy a bond or a CD that matures in 12 months or even a couple of years. The When it matures, you have no idea what the interest rates are going to be at that point in time. But if you have a fixed annuity, it just stays fixed. So that can be good and bad. The good part is, interest rates drop. You've locked yours in, and that's kind of how I feel about the way things are right now. I think there's a pretty good chance that if things keep going the way they're going, if they do raise interest rates fairly significantly, that'll slow things down quite a bit. Um, the So I don't think that that's going to happen. I think the economy is already starting to slow down for other reasons other than interest rates. But if the economy is starting to slow down, then they could start cutting interest rates, and that's where I think we're probably more likely to be. And very dangerous to try to forecast economies. It's not very easy to do. Uh, uh, One of the reasons a long time ago I used to say, I still say it a lot. You've heard it on this show if you've listened for any length of time. It's oh, my mind just went completely blank. Sorry about that. Somebody flashed something in front of my face. Lovely. Oh, it's just that the future is incredibly difficult to predict. Anything can happen. That's what I was going to say. Anything can happen and probably will. And people think I'm being facetious when I say that. And then there's a little bit in there, but the bottom line is you don't really know. To try to project out over a 1 or 2 year time period, good luck. Um, Anything can happen. And at some point in time, again, it probably will. You'll see fluctuation, big fluctuation. Stock market's always been volatile. That's one of the reasons that a few years ago I started doing fixed annuities. That's why I have them. Actually, I've got more than I've ever owned as a percentage of my total than in my entire life. And I like it. And the stock market would have to make extraordinarily good returns to be able to keep up with that over the next couple of years. And so I really like that. And it'd be incredibly difficult for the stock market to do that. Now there is a website if you'd like to get a quote to see, if you've got money sitting there, it's in a passbook savings account. They're starting to reduce passbook savings account rate a little bit. Depends on the bank that you're working with. We work with some vendors who shop across banks all across the country. And yeah, it's starting to slow down again. They started to reduce rates. Uh, if you are locking it in, or if you have a fixed annuity, it's fixed. So you get that rate and it's guaranteed. You're the only one that can let them out of that contract. Uh, and the insurance company can't come in and change it unless there's something catastrophic going on in the entire country. They're probably not going to do that. Yeah, and even during the 2008 crisis, the annuity companies I work with didn't have to cut back at all. So not to say that they will always do that, because you just, like I said, in the realm of all possibilities, all things are possible. But economically, things are actually going well, and there's always innovation. And if you really want to get an idea of where things might be going in the future, I hate to say it, but Popular Science is actually a really good magazine. So is Popular Mechanics. There are some others that I look at, but for to get fairly easily something you can pick up at a drugstore. Go to the magazine rack, Popular Mechanics. It's amazing how much stuff in there comes true. Now, I used to read it much more frequently. Now I can get it online, and so I use that quite a bit. And I use my Bloomberg service. That's a really nice service. That is it's unreal, but it's also super expensive. I do it because I can build my models, and not that that's easy, but the without the Bloomberg software or service, it's just not doable. Uh, well, it is doable, but you have to jump through a lot more hoops. So you have to figure out: are you going to spend your money, or are you going to spend your time? And that one's the most efficient as far as I've seen, and I've been doing this for about 30 years. So trying to get together with the vendors that will allow you to do some of those things with individual stocks, it's it's a long process, and but we're working on it. We'll be able to get it. Now it's also I'm looking at programs constantly, evaluating. There's some things I'm working on right now. I can't even really talk about it a lot because you have to go through vetting processes with these firms, financial firms, to allow you in on some of these programs. So that's where we're at with that. And if we do, if they decide that they're willing to take us on, and there are so many variables, the stock market itself has a big impact on how many new clients some of these firms will take. How well the economy's doing. Those are closely related in how the industry's doing. There are some times when, not often, but when the economy is doing fairly well, and you see a bunch of big firms that one buys the other one out so that they can cut their costs, and that's been happening for a lot in the past 10 years. I am amazed how much acquisitions have become extremely popular. So, yeah, it's pretty interesting out there. If you're getting close to retirement age, if you are above the age of 50, you're probably going to want to look at multiple scenarios. And a lot of people that are right around 50 years old, that's where some of these longer term guaranteed annuities can really help. And their annuities have a bad rep, being super expensive and not being very flexible. But some of them out there, they are. There's some of the products out there that are just like that. The costs are really high. The long-term returns probably not going to be that much. So you got to shop, and we are constantly looking at stuff. And if something ever comes along that looks really good and is better than what we have now, then I'll take it. Yeah. Hopefully, Mama didn't raise too big a fool. Just kidding. But it does change. It changes, and you have to, before you're 80, when you get to the age of 80, the number of companies that are willing to do that, or are willing to give you an annuity with what I consider to be the quote unquote good options, are almost non-existent. And the older you get, the harder it is to qualify, because the insurance companies got to get the money back that they put on the upfront basis to make these products available, and they need to have that money for a fairly long time period before they become profitable. And so if you're above the age of 80, and life expectancy in this country, I forget what it is. I think it's around 70. But that's for younger people. And I just have been told I get about 60 seconds before the commercials start. So I'm going to let let you know that this is Bill Bullington. I'm right here on 1420 every Saturday from 11 to noon. Stay tuned. I'll be back after these messages.
How long has it been since you felt that feeling of wonder, like a child, wide awake, counting down on Christmas Eve? We're in such a hurry for life to begin.
Text AM to 52886 and urge your member of Congress to help enact the law that would preserve AM radio in cars this year.
Hey, so question for you. Have you ever been through a Cleveland winter before? The harsh weather is on the way, and if you've got a leaky roof right now, or if you've got shingle issues, you need to take care of those, and you need to call Sky Roofing right now. If you've had leaks repaired in the past, maybe by a company that isn't around anymore, don't go with the fly-by-night storm chaser companies. Go with a company that's been here for a very long time and is going to be here for a very long time to come. Talking about Sky Roofing, taking care of homes and buildings in Greater Cleveland just like yours for over 22 years. So if you've got leaks, if you've got shingle damage, you need to get those things taken care of. Or if it's time to replace that roof altogether, call Sky Roofing, 440-349-6750. And if you've got new construction and you need a roof put on a new building, you call Sky Roofing. Take advantage of great rates on 5 to 7 year financing, including 12 months, same as cash. Call now, 440-349-6750. Sky Roofing is roofing done right.
Download the free WHK mobile app and listen to your favorite WHK programs or podcasts on the go. It's free in your app store.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com. You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program after 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit joycefactorydirect.com.
Well, welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. If you hear something you would like more information on, feel free to reach out to me. My email address is bill@bullingtoncapital.com. Excuse me. You can go to bullingtoncapital.com if you want to sign up for my email. It's free. And by the way, just putting your information on there doesn't mean anybody's going to call you unless you ask us to. And even then, it's pretty difficult. I get a lot of calls or requests. So and I apologize if you haven't, if you've done that in the last month or so, because the past couple of years have been rough. And nobody's talking about this, by the way. IT has been incredibly difficult, especially anything over the internet, for the past 2-3 years. Because a lot of the vendors they're making changes internally, and unless you're a billion-dollar client, you've had issues with connectivity, service going down, and that kind of thing. So that's one of the reasons I still have a job, actually, because it is incredibly difficult sometimes to get things done online. It used to be a lot easier, and oftentimes we're stuck, you know, all day working on trying to get a couple of issues done that normally would have taken about 5 minutes. And it's crazy. I've never seen anything like it. I remember a couple of years ago when this first started happening, I was going, "Wow!" I thought at the time, "Oh yeah, this will blow over. Maybe 6 weeks, 8 weeks." And here we are. It has improved. There is a lot of improvement, but it's still pretty challenging. And we are constantly looking into various alternatives, and that's one of the things I mentioned a little bit earlier. I've been looking into some alternatives, and some of them are pretty exciting. I don't want to really say too much about it until I've actually gone through vetting processes, both ours and theirs, and to see which programs we're really going to implement the upcoming year. So should be interesting to stay tuned. In the meantime, I got an article from The Economist. I like that magazine, actually. It's pretty good. Um, um, Sometimes I see a lot of people at Barnes and Noble. Some of the older people typically are reading it, in the concession area that they have there. It's pretty nice. So anyway, this article, it was published on November 29th, so just about a week ago. And it says, what a difference a year makes. As the world ahead in 2024 went to press in November 2023, the S&P, the leading index of American equities, was in the doldrums. Share prices were 15% off their peak in early 2022. A chart of the index's performance over the previous 2 years looked like a mountain range pushed up and down on inflation worries, undercut by rising interest rates and spooked by fears of a growth slowdown. When pondering what 2024 might bring, your correspondent argued that after a couple of years of deep uncertainty, investors might finally get enough information about the state of the economy to decide whether to be jubilant or miserable. And their verdict, they chose jubilation. Since its trough in October 2023, the S&P 500 has climbed by more than 40%. Now remember, that's the trough, that's the bottom after that big drop had just occurred. But whenever I read some of this, everybody goes, 40%, I'm not up 40%. But you have to go back and look at the actual chart. And unless you're 100% in stocks, by the way, you're not up 40% from the bottom, but you didn't go down that much either. So there's a trade-off there. Anyway, the American economy has powered on, unperturbed by tighter credit conditions. So it means rising interest rates, and you may not qualify for the loan quite as easy. Anyway, productivity has continued to surge. In the year to end of June 2024, output grew by 2.5%, an astonishing pace compared to the average from 2005 to 2019 of just 1.5%, and a better showing than even the most post-war average of 2.2%. They said it that way anyway. So you've got a 2.5 versus a 2.2 in the long run, and in the short run, it's been around 1.5. Inflation has all but abated. On a 3-month annualized basis, core PCE, the Federal Reserve's preferred gauge of price levels, now stands at just 2.3%, roughly in line with the target. Monetary policy is at last being eased. What does that mean? They're approving loans a little bit easier and lowering interest rates. That's the thing. Anyway, in September, Fed policy rates were cut for the first time since 2020 by 0.5 percentage points from their post-financial crisis peak of 5.25 to 5.5. So in other words, interest rates were going back down again, and not by a ton. They reserve the right to change their mind. If something happens, they may start to pick them back up again. If things keep going along the path that they're going on now, rates are going to continue to drop. So now all we need to do is find a crystal ball that works. but but right now you get some pretty good interest rates that are available for here. Let me just try something. Let's say you're 55 and you plan on retiring at 62, and you want to see how much money you can get on 100,000 bucks. What kind of income could you get that would be guaranteed? So from 55 to 62, that would be, let's see, at age 62. Oh, I asked for $100,000 worth of income. So yeah, you'd you'd need $940,000 today's dollars to produce 100,000. That's pretty good. I mean, you're getting 100,000 off of 940,000. But you've been in there for 7 years. So if you want to see, the easiest thing to do with this, by the way, is just hit me up with an email. I'll send you the link to this. You can go in and put your own numbers in and mess around with it. One of them asks you to put in how much income you'd like to have, and the other one asks if you invested X amount of dollars, you put the number in there. How much would that be worth when I reached a certain age? And so I just put $100,000. This one actually came with, when I went to the page, it was already there. I put $100,000 invested, 55 years old. I plan on taking it 7 years from now when I'm first eligible for Social Security under normal conditions. And if I were to do that, 100,000 bucks, 55. Then at 62, 7 years from now, I'd get 10,627. You know how hard that is to do? I mean, you try to do that with the stock market, that's incredibly difficult. And especially in the environment that we've been in the past, I don't know, 10, 15 years, market has not done nearly as well in since the year 2000 as it had done in years prior to that. And I was saying, if you go back to 2022, or actually the fourth quarter of 2021, that's 3 years ago, the total return on the S&P, which is one of the better performing indexes, is only up 28% over, let's see, 1, 2, 3 years. Okay? That's still not bad. It's better than the sharp sticky method. But it was down at one point in time almost 27% from that starting point. And that's my point. It's just, to get those returns anymore, you can still do it, but it's incredibly volatile. And for the vast majority of people who are in balanced funds, this is the number one mistake people make, as far as I'm concerned. These are the calls I get most frequently. If somebody's upset about their performance, they're looking at the stock market. The S&P 500 is what they refer to as the stock market. It's not the market. It's not the whole market. But that's as good as any. And since they're familiar with that, I'll just stick with it. So if you look at that and you compare that to a balanced account that's got bonds and money market in it, because for safety, the safety costs you money. It's not going to keep up with the stock market. So, and the average balance is typically for somebody who's over the age of 50 is somewhere around a 60-40, 60% stock, 40% bond. Well, that's not going to keep up to the stock market. It won't go down as much when the market goes down, but when it goes up, it's not going to go up as much either. And I think that's the number one issue that the average person has to deal with. And I know that those are the calls that I get. Hey, market's up this much and we're only up this much. Yeah, because you got 40% of your money in bonds. Why do we have so much in bonds? Well, because, the crystal balls that I've purchased over the years, one of them's still on my desk. They don't work. And you don't really necessarily need to have that. I mean, you shouldn't have to have more than 65, 70% of your money invested in stock bonds. And that's a broad category, by the way. I'm hoping that you've got some sort of a strategy there to invest in them. Whatever that strategy is, just it doesn't have to be the best, but the vast majority of stock funds, even if it's mediocre strategy, has a tendency to do very well if you give it enough time. Well, what happens is somebody's got pretty decent strategies. They've got 2/3 of their money in stocks, and they pull out when the market's going down. So they don't pull out at the top. They pull out after the market's already gone down fairly substantial. And then they wait. They're not convinced that the market's going to keep going up until after it's already gone up a lot. And that's been going on since I have been in this business. Wash, rinse, and repeat. I think the number of, if you look at the percentages of people that are still not keeping up with the market, I'm pretty sure that number is higher today than it was when I started in this industry, because when I first started in the industry, you only got a statement once a quarter. You couldn't tune in and watch it all day, every tick. And I know for a fact that the more access people have had to watch their investments more closely, the poorer their performance has become. Markets are extremely random, especially in the short run. And they, at some point in time, if you keep watching it, it's going to scare you. It's going to scare you right out. It's going to make you normally aren't singing songs of happiness when the market's crashed. That's when you get the opposite effect. And then when the market goes to new highs, everybody's all happy. And that hasn't changed. I can't believe that hasn't changed. I thought by this point in my career that I would be done. There would be no use for us anymore, because everybody was going to learn this and get it the right way and do it the right way. And it's hilarious. But and there are always changes. I mean, I can't tell you how many thousands of options you have now. Yikes. There are more funds and more managed portfolios. They call them SMAs, separately managed accounts. There are 4 to 5 times the number of funds and managed accounts than there are stocks for them to invest in. That's been the biggest change. So is it going to matter? Does that matter? Well, it makes it harder. Okay, so you'll have fewer companies that will actually keep up with or outperform indexes. And in the spread between the time periods where they do outperform. If you're outperforming the market, it's because you're not doing exactly what the market's doing. And what that means is sometimes the market will be going down and you will be buying if you're a portfolio manager. And sometimes the market's going to be going up and you're going to be selling. If your strategy is valid and it works, that's going to happen. There are going to be time periods where you're not doing as well as the market is. There are going to be time periods where inevitably at some point in time, if it's a good strategy, you'll do better. But it's never easy. And this is never easy. And I guess I should be thankful for that, because that's really what keeps me in business. That's my job. When you get really antsy about markets, when you're looking at CNN online, which I was looking at today, I've been told I've only got 60 seconds before I got to go to commercial break, so I'll have to wait until after I come back to finish that thought. In the meantime, this is Bill Bullington. You can reach out to me at through my website, bullingtoncapital.com. And I'll tell you what, I'll be back after these commercial messages.
Snowflakes coming down, we're just running round, and nothing could be better. Your hand just fits in mine. There's magic in these lights, no matter what the weather.
Plumbity plum kadee-ka-da, it's why it works the plumbers. Plumbity plum kadee-ka-da, with Cleveland Christmas wishes. Wa-la-la, wallaka-doodle with us. Wa-la-la, wallaka-doodle with us.
Hey! Now Santa's got his flying deer and old-time Christmas magic.
But when his plumbing goes kaput and things look kind of tragic,
he picks up the phone and makes the call. Now there's Christmas cheer.
Considers it done and has his fun. Wallaka-doodles with us.
Ho!
Plumbity plum kadee-ka-da, it's why it works the plumbers.
Whoa!
Plumbity plum kadee-ka-da, with Cleveland Christmas wishes. Wa-la-la, wallaka-doodle with us. Wa-la-la, wallaka-doodle with us.
Merry Christmas and happy holidays, Cleveland.
Wishing you all the best.
From your hard-working, straight-talking, do-it-right friends
at whyitworks.com.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Looking for more than just a job? Look in the right place. For a career that inspires you, visit ChristianJobs.com. That's ChristianJobs.com.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
Well, welcome back. Good to be back here. By the way, if you hear anything you'd like more information on, or you'd just like to talk about your personal situation, you can go to my website. It's bullingtoncapital.com, and there's a link there. There's a page there where you can fill something out. We will try to get back to you as quickly as we possibly can. This is an enormously busy time of year, incidentally. If you haven't already gotten your RMD out, you better hurry. A lot of the custodians, the firms like Fidelity and all the other big, Charles Schwab, the brokerage firms, many of them will not guarantee now that you'll get your RMD out if you request it on Monday, because everybody has gotten the same idea. I'm going to leave my money in until the last possible second. It's just, you can't do that, especially not anymore. Because, again, if you make the request now, if you do it Monday morning, there's a pretty good chance that they're not going to be able to process it before the end of the year. And because everybody else has had the same idea for a very long time period. And we'll still try. We just can't guarantee that it will get there. And, again, most of the custodians I've dealt with over the years, they're all saying you got to get them in earlier because everybody's doing the same thing. Wait until the very last second, trying to squeeze out an extra, 0.5% or 1% or whatever it is. And by the way, you take the risk of it going down when you do that as well. So it's just like timing the market. It's impossible to do that. at least to do it consistently. And I know I've seen all the internet ads. I've purchased an unbelievable amount of software over the years, and if I'd have just put half of that software that I purchased into savings, I would be way better off. Even in a passbook savings account, actually, that's the vast majority of the market timing stuff. It just doesn't work. And if you know of one that does work, I will test it, and if it does work, I'll be glad to pay you for it. That's basically what I started telling some of the vendors of those products when I finally wised up and said, "Hey, look, you send me the software, I'll test it out. If it works in the first few months, first 90 days, I'll pay you for it." And I never had anybody take me up on that. I knew I wouldn't, but at any rate, I sent out a newsletter. I send them out every week, and one of the articles this week was it was on 5 questions that you should ask before donating to a charity. And I thought, yeah, I thought that's pretty interesting. People are trying to do that now. You got to get those things in by the end of the year too, to try to, if you're going to try to make some contributions. We'll talk about some other options on how to do that next week. But the 5 questions for donating. The first one was, does your charity's mission align with your values? Pretty important. There's a company called GuideStar, I guess. GuideStar is GUIDESTAR. They have a charitable organization database that you can use. I think that's probably a good idea. Kind of check it out, because if it's a tax-exempt charitable organization, then they're registered as a 501c3 nonprofit. According to the IRS purposes set forth in 501c3 are charitable, religious, educational, scientific, literary, testing for public safety, fostering national and international amateur sports competition, and preventing cruelty to children or animals. The categories of organizations with tax-exempt statuses are broad, so there should be many choices. Yep, so lots of ways you can contribute to some organizations, and being able to write that off. Let's see. Fortunately, the IRS has a searchable database to verify your charity's tax-exempt status. It gives you the website address there. You can search by the exact charity name or the EIN tax identification number, and the database provides the most recently filed IRS Form 990. There are exceptions, as certain charitable organizations, such as churches and church schools, may be exempt from filing the IRS Form 990 and still maintain their tax-exempt status. I would actually consult with your tax advisor on something like that. And says the government of Canada also has a similar searchable database. One of the headlines in this article is your donation going to causes or administration? I had some experience with some nonprofits. They were raising lots and lots of money, but the vast majority of that the vast majority of the money that they were raising was going to the operating costs of the organization, and not as much to the actual charity or the people that they were supposed to help or be helping. You got to be careful about that. This article shows you it gives you a couple of different ideas as far as doing background checks on the charitable organization that you're giving money to. So again, these are free. If you want to sign up for this, just go to my website, bullingtoncapital.com, and this was just one of the articles. There were, I send out about 4 or 5 a week, and actually they suggest a bunch of articles, and then I just pick out the ones I think my clients might get the most use out of, and we send that out to them. And there's no charge, and nobody's ever going to call to hit you up for anything. In fact, I have a really tough time calling everybody that wants me to call now, and they're asking me to call them. So, yeah, I really like the service. It's actually called Advisor Stream. They're the ones that do the heavy lifting and then make suggestions, and I just approve or disapprove of the articles depending on what they are, and pretty interesting. I'm not sure that a lot of them like what to expect from America's stock markets in 2025. That is anybody's guess. And you know why they publish stuff like that? Because everybody wants to know. And everybody just thinks that somebody out there is going to get it and they're going to get it right. That's like predicting how many points the Browns are going to score, in their next game. And which is very difficult. They probably actually 3 games in a row. So that would be incredibly difficult to do. And I would suggest that if you did get it, it wasn't skill, luck. The same thing with financial markets. You guess exactly what the market's going to do, it's not going to be skill. It's going to be luck. Over time, stocks have a tendency to do better than bonds and cash. But there are long time periods where the returns are negative. And that's the thing you have when you're doing your planning for retirement income. You got to take that into account. Now, I look at the periods of 2000 through 2003 where the market was down nearly 50%, and then 2007 of November through March of 2009 where it was down more than 50%. And so you go for a 10-year time period. If you had invested in March of 2000, by March of 2010, you were still negative. That's 10 years. That you have to be aware of that. You got to factor stuff like that in to your retirement income plan. Ignoring it or not doing it is a big mistake. It's a huge mistake, and that's an avoidable mistake. Now, that doesn't mean that you're going to avoid all declines. You won't. But you shouldn't have so much of your investment money into stocks or the stock market that a decline like that would impact your lifestyle. In other words, instead of being a 70 or 80% stock or 100% stock, you might want to be somewhere in the 40 to 60% range, somewhere in there, 40 to 65. And that way, let's say you're 65 as the market drops. By the way, I buy short-term bond funds. They're extremely short-term. Why? Well, because when they go down, they bounce back super quick. That's the main reason, because I'm trying to get some safety there. And I like the safety, but also like to make a little bit of income as well. So those are the types of bonds. I think there are lots of them out there. There's hundreds of them. But I have my favorite. But they're there for safety because they're not going to drop by 50%, where the stock market did twice inside of one 10-year period. And if you did it right, it gives you the opportunity to rebalance. Now, I don't see very many people rebalance. 2008, 2009, we rebalanced for our clients. I'm not even sure we have the manpower to get that done now. We will do it. But we have that discussion before we set the account up. If you're okay with us going in and doing it whenever I feel like it's a good time to do that, then we'll do it. But most people, you're better off just sticking to a schedule, and it'll do it automatically. So, and that's how most people should be managed. Basically, it's what I do with mine, is I have a schedule. And every year on my anniversary date, when I open up that account, it's the rebalance date. I'm going to take a look, see how much money I have in stocks, see how much money I have in fixed income. And if I'm not at least 75% in stocks, I'm going to sell some of that fixed income and add it to my stocks. When would that happen? When the stocks are down a lot. See, if stocks have had a great year, and now I'm 85% stock. Well, I'm going to take 10% of that portfolio, and I'm going to move it over to the fixed income bond side. It's called rebalancing. And I don't have to know what the market's going to do. This has been killing me my entire career. I've been talking about this for 30 days. You do not have to know what the market's going to do. What you need to know is what is your real risk tolerance, because the chances of you being able to time it up are next to zero. Well, they're about as good as the Browns going undefeated for 3 years in a row. Okay. That's what your chances are. There is a chance. It's just not a good one. So what's the next best way to do that? Well, is to figure out how much risk you can really take. Set your portfolio up to match that risk tolerance and then rebalance. I've only got about 30 seconds, so we'll pick this back up on the show next week. Or you can call me, and we can set up a phone meeting or a meeting in person, and we can go through this. And there's no cost to doing that, by the way. So this is Bill Bullington. I'm here every Saturday morning from 11 to noon. My firm is called Bullington Capital. You can find it at bullingtoncapital.com on the internet. And hope you all have a good week, good investing, and good luck.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.